It's Tuesday, March 14th, 2023. No surprise, we got a little bit of a market rally today. They're trying to calm everybody down, trying to cool everything off, trying to tell you and I everything's going to be okay. We're going to talk about this today, but before I discuss this with all of you and what's taking place and why you should be very, very concerned, I want to comment on something I watched today. I was watching the Dave Ramsey show, watching a clip of Dave Ramsey on YouTube this morning, and I was a little bit surprised, maybe not really that surprised. I like Dave Ramsey. I would say that I would probably agree with 90% of what he has to say, but there are times where I'm really shocked with what he says. And on today's show, I was watching this clip, and he had one of his sidekicks on, and they were talking about this SVB collapse. And Dave went on to try and calm everybody down. As you know, Dave is very, very heavily invested in real estate. But he says the FDIC covers up to $250,000, that the average American has nothing to worry about. What he doesn't tell you is 1.5 cents for every dollar. That is what FDIC insures for the deposits in U.S. banks. For every dollar in the bank, 1.5 cents of that is covered. So it does not cover every dollar in the bank. And if we had a massive run on all of our banks, most people would not be covered because, again, only 1.5 cents for every dollar in the bank is insured by the FDIC. He said that this collapse, the SVB collapse, this does not affect your local bank because this bank was full of players. He said players, not players. He said players, venture capitalists, startups, and a lot of rich people. He says your bank is safe. Calm your butt down. Well, I'm going to tell you, yesterday I was not too calm. The money that I had in one of my tax accounts, I pulled most of that out because I just did not want to take a chance because that same bank is down again today. Now, we saw a lot of the regional banks come back, but we are seeing a huge inflow into the big boys: Chase, Bank of America, Wells Fargo. Dave went on to say they had a lot of bonds, and their bond portfolio got slammed because of rising interest rates. That is true. Your local bank is fine, he went on to say. Your bank doesn't have players. I guess your bank doesn't have the ultra rich putting millions of dollars into their accounts at your bank. I don't know how he knows that, but he says the FDIC is going to pay back people up to $250,000 in their bank, so nothing to worry about. And he doesn't say how long it's going to take for those people to get their money. He doesn't say anything that they're going to actually cover people who had millions of dollars in those accounts. And I think that that's pretty interesting now that we're going to be covering way beyond the FDIC amount. And who's on the hook for this? We're being told that don't you worry about it, the taxpayer doesn't have to worry about it, but the money's coming from somewhere. They're going to print the money. So this is just another form of QE. And this is going to be a problem because it's going to cause more inflation. You may not be taxed for it, but you're going to pay for it because your dollar is going to continue to be devalued here with the billions of dollars that they're going to print to clean up this mess. He said, Dave went on to say this: my local bank is fine. I'm not worried one iota. And now look, this is not an attack on Dave Ramsey, but you better be really careful of the advice you're taking. You really better be careful here. But to tell people that your bank is fine, that you're not worried and you shouldn't be either, I totally disagree. Went on to say that we've got great news today. Bond market freaked out. Bond interest rates dropped. Bond prices went up. So run to your mortgage company today. It is a great time to get a mortgage and buy a house. In fact, go to Churchill. He says go to Churchill Mortgage today. That's his sponsor. I would think that 99% of the people watching this channel today know this is the worst possible time to run to your mortgage company, worst possible time to buy a house. And here we go, Dave Ramsey again. He did this months ago, what, 6 months ago? It's telling us it was a great time to buy a house, and this is the worst time to buy a house. If you bought a house last year, over 500,000 people already upside down. So I think bankrate.com had the 30-year at 7.03. I've seen it lower on other sites. Do you really think this is a great time? I mean, we are witnessing bank runs, and Dave Ramsey is telling you to run your mortgage company because you can get a 30-year at 7.03. Go buy a house. He also wanted to say this, and I thought this was pretty interesting. People are going and buying gold. And his sidekick goes, oh my goodness. And Dave goes, this is the Wild West. This is the Wild West because people are flocking to gold. And his little sidekick, George, said that there's a lot of fear-mongering going on. This is one of his co-hosts. Seems like a nice guy. Look, I'm not here to down anybody, to judge anybody, but I just, I want to get your input on this. If you watch this clip, if you go to YouTube and look for this clip, it came out today. Dave Ramsey saying that gold is the wild, wild west, that, you know, this is just fear-mongering. I think that's dangerous. I really do. So he's going to tell you to get into the markets. He's going to tell you to go buy a house today. I totally say do the opposite. Don't buy a house today. Go buy some gold today. Go buy some silver today. Whatever you do, do not buy a house. Do not jump into these markets right now. This is very, very risky. But he's always been anti-gold. But I like to ask Dave a couple questions. The bank that or the banks that you deal with, did they make these terrible car loans, you know, loan to value 140%, 15,000+ cars being repoed a day, depreciating daily? How many billions of dollars of risky car loans were made in the last 2 years? How about those risky RV loans? When people had all this easy money, all this crypto money, and banks were loaning out money for next to nothing. How about commercial real estate? I see a lot of vacant commercial real estate in my area, and I'm sure you do too in your areas. Well, who's going to pay for all these losses in cars, RVs, commercial real estate? And how about the home loans? People buying homes that were so overpriced, not even getting home inspections. Homes from the home builders weren't even finished, and people buying these homes paid so much overvalue. What's going to happen now as we begin to see prices continue to come down, people losing equity, people losing their homes, more commercial real estate sitting empty? Who's going to be on the hook for this? Probably your bank. Probably your bank. So I say this to Dave Ramsey today: your bank is not safe. And I say this to all of you: your bank is not safe. Yes, I think we're going to see more inflows into the big boys, the JP Morgans, the Bank of Americas, the Citigroups, the Wells Fargo. And they would be the last to fall. And if those banks fell, it is completely over. We're going to have much bigger problems than getting our dollars out of a bank at that point. But I would say this: Moody'S came out today, and they would totally disagree with two people, and that would be the president and Dave Ramsey. And we'll talk a little bit more about that right now. Moody'S cuts outlook on U.S. banking system to negative, citing rapidly deteriorating operating environment. So Dave Ramsey thinks this is not a problem, but Moody'S says it is. They cited a rapidly deteriorating operating environment. So I'll take their word over Dave Ramsey's, and I'll take their word over the president's. And just a quick note, you know, by bailing these banks out, we are going to continue to give the green light for them to invest more into mortgage-backed securities. The government, they just believe now, will just bail them out if they get into trouble. So this is going to allow them to invest even more in mortgage-backed securities. So that means more problems. So when you have banks that don't believe there's any risk because they'll get bailed out, you're creating huge huge, catastrophic trouble down the road. Rob Kiyosaki predicts Credit Suisse will be the next bank to fail. They had $20 billion in losses in 2022. Their stock in 1 year is down 69%. Daily Mail, Credit Suisse shares fall to all-time low as bank announces it has found material weakness just hours after Wall Street expert predicted that it would be the next to fall after SVB. Rob Kiyosaki, rich dad, poor dad, one of the best. I mean, you know, if you want to listen to people who really are going to give you their honest opinion, who really believe what they say and are walking the walk, listen to people like Robert Kiyosaki. Yesterday, he came out, watch this on Fox Business. Credit Suisse would be the next to fall. The Hedge today. Yes, the latest bank bailout is really a bailout, and you are paying for it. As I said in the beginning of this video, it's called inflation. The money's coming from somewhere. This is just more QE. Why did these people in these banks have multi-millions of dollars in these accounts? FDIC insures up to $250,000. These people are savvy enough to know this. But I guess that they didn't bother taking the time to manage those deposits. They didn't take the time to understand the deposit rules, which a fifth grader would understand. But don't worry, the Federal Reserve, ladies and gentlemen, announced its new bank funding program, which will flood the banking system with a lot of new money. So these people who didn't put their money in multiple banks, instead just said, I'll put 10 million here in SVB. This person said, I'll put 2 million, here's $1 million, knowing very well, quite well, that those accounts were insured up to $250,000, and that's it. So why wouldn't they have just spread it around? If they had to have that money in the bank, why wouldn't they have it in multiple banks? Obviously, they trust the banking system enough that they didn't care how much money they put in those accounts. Another one from The Hedge. Too big to fail banks flooded with deposits as bank run drains small banks of cash. You have to ask this. Was this the plan? Was this done on purpose to really hurt these regional and smaller banks so that the big boys would benefit? JP Morgan, the largest U.S. bank, is about to become much, much bigger. They received billions of dollars in recent days, along with Bank of America, Citigroup, and Wells Fargo, all while the smaller banks are losing deposits quickly. Think about that. Could this have been done on purpose? Was this completely planned? I don't know. Love to know your thoughts. But anything is possible today. The AP, U.S. inflation eases but stays high, putting Fed in tough spot. So we're looking at inflation at 6% higher compared to a year ago. So the question is now, is the Fed going to raise or not? I believe it will be 25 basis points. But they have a very, very serious choice to make here at the next meeting. If they raise rates, they're going to have to worry about contagion. If they don't raise rates, they have to worry about inflation. So what's it going to be? I think Jerome Powell goes right down the middle, goes 25. Inflation gauge increased 0.4% in February as expected and up 6% from a year ago. This on CNBC. This is far away from the 2% the Fed wants. They're going to have to keep the foot on the pedal here. And I think Jerome Powell should go 50 basis points at the next meeting, but I think we know that's not going to happen. But they're going to have a very, very serious choice to make here. And if he does not raise rates, if he pauses at this next meeting, you are going to see gold and silver go absolutely ballistic. Tyson Foods to lay off 1,700 workers and close 2 chicken plants. This will take place in May. So that's interesting that we're going to continue to see more job losses, yet unemployment is only at 3.6%. Meta to lay off 10,000 more workers after initial job cuts in November. I think they laid off, 11,000 in November. We're going to see a lot more layoffs in tech. We're going to see a lot more blue-collar jobs be lost here with this economy. But do you believe that unemployment is really only 3.6%? I don't. Simon Black on The Hedge. The unraveling can happen in an instant. So think about this. A very good point here. You look at SVB and you look at the banking system as a whole. Countless investigations, all these stress tests, all the new banking regulations, and two big banks, Signature and SVB, fail, and they fail fast. So does that mean that this could happen to your bank? Could this happen to Dave Ramsey's bank? Yes. SVB didn't fall because it made a bunch of risky loans. It failed because it parked a majority of their depositors' money, $120 billion in U.S. government bonds, which are supposed to be the safest, most risk-free assets in the world. But the problem is they thought rates would stay at zero forever, but they didn't. Rates went up. And this absolutely wiped out their bond portfolio. Rising rates caused huge losses. And most of that was in 10-year Treasury bonds. And they paid a big price here, believing that the Fed wouldn't raise rates, believing that we would stay at near zero. And we're going to continue to see rates rise. And we're going to continue to see a huge effect on businesses and the financial sector, no doubt about it. And so as I close today, I just wanted to just comment on this Dave Ramsey video today. If you get a chance, check it out. But I was really kind of thrown back a little bit. First off, to tell people to go out and get a mortgage and buy a house, and to call people that are buying gold fear mongers, conspiracy theorists, wild, wild west. That's shocking. That's really shocking. You know, when you look at the amount of big money now, big players coming into the gold market, and just talking to SD Bullion the other day, a gentleman coming in buying $1 million in gold, another one $700,000 in gold, $800,000 in gold. These are individual purchases. And so to sit there and think that you should just be in the system, be in the banks, be buying homes today, be gambling in the stock market, I think that is completely risky. And I'm going to do everything I can right now to avoid risk. I'm going to stockpile cash, gold, land. That's what I'm doing. I don't give financial advice. You can do whatever you want to do. But be very careful out there, and be extremely careful who you're listening to. Listen to people like Rob Kiyosaki. Listen to people who are walking the walk. Don't listen to the people who don't have any skin in the game, or people who really aren't walking the walk, or people who are just selling fear but don't really believe anything's going to happen. You know that things are going to happen. You know that there's risk out there, and there's things that we have to be fearful of, and we need to take action to protect ourselves from that. But there's a lot of people making videos out here that don't walk the walk, and you know who they are. But there's a lot of people who just want the clicks, they want the views, but many of these people have no preparations, they have no gold, they have no silver or very little, they have no food preparations, no security training, no skill set, yet they're telling you everything's going to collapse while they do nothing because they don't really believe it. They want to make money, they want views. I believe sincerely, and what just happened over the weekend is a reminder that this is very, very real, and that a lot of people are going to get hurt. And why I walk the walk, and why I'm preparing, why I make sacrifices, buying the gold, buying the silver, going out, doing the training, getting better mental, physical, spiritual shape, financial shape. All this takes sacrifice, ladies and gentlemen, and many of you are doing it. Many of you are doing it way more than me. But it takes sacrifice, and a lot of people don't want to make that sacrifice. They'd rather just go out there and either tell you how great it is or tell you how bad it is so that they can make money and get views and hope that nothing bad happens. So walk the walk. There is no doubt big things, big events coming, and these banks and these financial institutions and this economy are in extremely serious trouble. You know it, and I know it. So this is no time to be a wannabe. It's no time to be fake. This is the time to walk the walk. This is the time to get ready. This is the time to make the sacrifices and do everything in your power and your ability to get ready. I'm going to leave it there today. God bless all of you. I look forward to speaking with all of you very, very soon. Stay safe out there, and don't get complacent. They're going to want everybody to forget about this by next week. They're going to get these markets to rally back, get the bank stocks to rally back. They're going to calm it all down. But just as fast as these two banks just went down, the next one will happen. And it'll be bigger, it'll be worse. And maybe next time, your bank might not let you get your money out. Maybe your bank will close down. Maybe Dave Ramsey's bank will close down. God bless all of you. Stay safe.